Hi there. Ever heard of VOO? No, it's not a high-end sports car or a tropical island. It's actually a powerhouse of the investment world. If you've been contemplating investing in the stock market, VOO might just be your ticket to a fruitful financial future. Welcome back to our channel. In today's video, we're diving into everything you need to know about VOO, Vanguard's S&P 500 ETF. We'll cover what VOO is, how it works, and most importantly, what you should consider before investing your hard-earned money. But before we dive in, don't forget to subscribe to our channel and hit that notification bell so you always stay updated on our content. Now, let's get started. What is VOO? Alright, let's dive deeper into the basics of VOO, or the Vanguard S&P 500 ETF, one of the most popular investment vehicles in the financial market today. VOO is an exchange-traded fund, or ETF. For those new to this term, an ETF is a type of security that involves a collection of securities, like stocks, that often tracks an underlying index, in this case, the S&P 500 index. ETFs are listed on exchanges, and the prices of their shares fluctuate throughout the day as the ETFs are bought and sold. This is somewhat similar to mutual funds, but they are traded much like individual stocks. Now, you may ask, what does S&P and VOO's name denote? The S&P stands for Standard & Poor's, the financial services company that created the S&P 500 index. The S&P 500 is one of the most commonly followed equity indices and represents the pulse of the U.S. stock market. The index covers approximately 80% of the available market capitalization in the United States, essentially making it a good snapshot of the U.S. economy's health. When you invest in VOO, you're purchasing shares in a fund that strives to match the S&P 500 index's performance. The VOO, in essence, holds shares of each company that is part of the S&P 500 in proportion to its size or market capitalization. What this means for you as an investor is that with just one single investment in VOO, you're gaining exposure to 500 of the largest publicly traded companies in the U.S. across all sectors of the economy, including but not limited to technology, healthcare, finance, and consumer discretionary sectors. This provides a level of diversification that can be challenging and costly to achieve if you were to buy individual stocks. VOO is one of the most significant ETFs globally, with a net asset value amounting to hundreds of billions of dollars. This sheer size and scale provide the ETF with significant liquidity, which is an essential aspect of any investment. Liquidity ensures that you can buy and sell shares of VOO easily and at fair prices without dramatically affecting the share price. The size of VOO also allows it to precisely mirror the composition and performance of the S&P 500 index, which smaller ETFs may struggle to do due to their limited assets. Another critical aspect to understand about VOO is its structure. The fund is structured as an open-ended ETF. This specific structure gives the fund the flexibility to issue and redeem shares on an ongoing basis. As a result, the supply of VOO shares can adjust to meet investor demand, which helps the fund's market price stay closely aligned with its net asset value. We can understand why VOO holds such a prominent place in the world of investments. It provides broad market exposure, low costs, and high liquidity, all of which make it a solid consideration for investors looking to tap into the growth potential of the U.S. economy. Why VOO? Now that we've established what VOO is, let's discuss why VOO might be a worthy consideration for your investment portfolio. There are several reasons why investors might choose to invest in this particular ETF, from its low expense ratio to its broad diversification and the potential for long-term growth. One of the most prominent features of VOO, and indeed one of the main reasons why many investors are drawn to it, is its passive investment strategy. Unlike active funds, which involve fund managers making specific investments to outperform the market, passive funds like VOO aim to mimic the performance of a specific market index, in this case, the S&P 500. The goal here isn't to beat the market, but rather to match its performance. This passive strategy offers several key benefits. Firstly, it typically involves lower costs. Active management requires a team of analysts and fund managers who command substantial fees for their expertise. On the other hand, a passive fund like VOO merely replicates the composition of an index, which requires far less hands-on management. This approach results in lower operating expenses, which are passed on to investors in the form of lower fees. VOO boasts one of the industry's lowest expense ratios, just 0.03%. What does this mean in practical terms? Well, if you invest $10,000 in VOO, only $3 of that goes towards the fund's annual operating expenses. The rest remains invested in the fund, where it can potentially grow over time. This low-fee structure is one of the key advantages of VOO and can make a significant difference to your returns over the long term. Broad diversification is another key selling point of VOO. The fund holds shares in every company in the S&P 500, giving investors exposure to a wide range of sectors and industries. This is a great way to spread risk. Rather than putting all your eggs in one basket by investing in a single stock or sector, you can spread your investment across the entire U.S. market. This means that even if one company or sector underperforms, it can be offset by the performance of others. Now, let's look at historical performance. While past performance is no guarantee of future results, the long-term trend of S&P 500 and, by extension, VOO has been positive. Finally, investing in VOO is, in essence, a bet on the long-term growth of the U.S. economy. By holding a broad cross-section of U.S. stocks, VOO gives investors a stake in the growth and profitability of U.S. companies. Given the U.S. economy's historical strength and resilience, this can be a sound long-term investment strategy. Things to consider before investing in VOO. Despite the advantages that we've discussed about VOO, like any investment, it's not without risks and things to consider. Investing in VOO may not be suitable for everyone, and it's crucial to take into account several factors before deciding to invest. Firstly, it's important to understand the nature of investing in an index fund. As VOO is designed to track the S&P 500 index, your investment will go through the ups and downs of this index. This means that if the S&P 500 index experiences a downturn, so too will your investment in VOO. It's key to remember that while historically the S&P 500 has had an upward trajectory, there have been periods of significant downturns, including recessions and bear markets. An investor should be prepared for these periods of volatility and not be prone to panic selling during these times. One way to navigate this volatility is by adopting a long-term investment approach. Historically, the U.S. stock market has tended to rise over long periods despite short-term fluctuations. A long-term investment strategy could potentially allow you to weather periods of poor performance and capitalize on the overall long-term trend of the market. However, it's crucial to consider your own risk tolerance and investment time horizon before adopting this strategy. Another factor to consider is your own investment goals and needs. While VOO offers broad exposure to the U.S. stock market and has a low expense ratio, it may not be suitable for investors seeking a high degree of income or those who prefer to invest in a particular sector. Similarly, while VOO's broad diversification can be an advantage, it may not be ideal for those who want to focus their investments on a particular sector or type of company. For example, if you're particularly bullish on the technology sector or prefer to invest in small-cap stocks, a sector-specific or small-cap ETF may be a better fit for your investment objectives. It's also important to consider your other investments when thinking about investing in VOO. While VOO offers diversification within the U.S. stock market, it doesn't provide exposure to other types of assets or international markets. If VOO were to make a large portion of your portfolio, you might find that your overall portfolio is heavily skewed towards U.S. equities. Depending on your financial goals and risk tolerance, you may need to complement VOO with other investments to ensure that you have a balanced and diversified portfolio. Lastly, while VOO's expense ratio is low, it's not the only cost to consider. There may also be brokerage fees to pay when you buy or sell shares. These fees can vary depending on your broker, so it's crucial to understand these costs before investing. How to invest in VOO. By the way, if you're still an ultimate beginner to investing, you can watch one of our videos about how to invest, and we will show you the basics. Link in the description box. So you've decided that VOO aligns with your investment goals, and you're ready to dive in. But how exactly do you go about investing in VOO? Well, let's walk through the process step by step. First things first, you'll need a brokerage account. A brokerage account is like a bank account, but instead of holding money, it holds investments like stocks, bonds, and ETFs. There are numerous brokerages out there, and each has its own unique features. Some brokerages may charge transaction fees for buying and selling ETFs, while others offer commission-free trades. Do your due diligence and make sure to select a brokerage that suits your needs and preferences. Once you've opened up your brokerage account, you'll need to fund it. This typically involves transferring money from your bank account into your brokerage account. Remember, only invest money that you can afford to put at risk. The stock market is inherently volatile, and there's always the possibility that you could lose your initial investment. As a rule of thumb, it is generally advised to have an emergency fund in place and to have paid off high-interest debt before investing in the stock market. With your account funded, you're ready to buy VOO. In your brokerage account, you can search for VOO by its ticker symbol. Once you've found it, you'll need to place a buy order. There are two main types of orders you can place, a market order and a limit order. A market order will purchase VOO at its current market price, while a limit order will only purchase VOO if it drops to a specified price or lower. If you're planning to hold on to your VOO for the long term and aren't too concerned with short-term price fluctuations, a market order could be the simplest option. When placing your order, you'll also need to specify how many shares of VOO you want to purchase. You'll need to buy at least one share, but beyond that, you can purchase as many or as few shares as you like. Keep in mind that some brokerages offer fractional shares, which means you can invest a specific dollar amount in VOO even if it doesn't add up to a full share. After you've placed your order, your brokerage will handle the rest. They'll execute an order on your behalf, and then, once the transaction is complete, the shares of VOO will appear in your account. From that point forward, you're officially an investor in VOO. Now, once you've invested, it's crucial to keep an eye on your investments. Regularly review your portfolio and make sure it continues to align with your financial goals. If your circumstances change or if there's a significant shift in the market, you may need to rebalance your portfolio to maintain your desired asset allocation. One last piece of advice. Remember that investing is typically a long-term endeavor. The stock market can be volatile in the short term, but historically, it has trended upwards over long periods. Patience can be a virtue when investing in the stock market. If you're investing for a long-term goal, like retirement, don't be too worried about short-term market fluctuations. Stay the course and keep your long-term objectives in mind. And there you have it, a step-by-step guide on how to invest in VOO. As always, keep in mind that all investing involves risk, and it's important to do your own research or consult with a financial advisor before making investment decisions. And that's a wrap. Today we've covered the ins and outs of VOO, Vanguard's S&P 500 ETF. Investing in VOO could be a great strategy if you're looking for broad market exposure at low cost. But remember, always do your research and consider your personal financial situation before investing. Did you find this video helpful? If so, please hit that like button and share this video with your friends and family. And don't forget to subscribe to our channel for more financial wisdom. Here's to your financial success.